Imagine a hidden habit that's quietly draining your financial potential, and it has nothing to do with your income or budgeting skills. This habit stems from a confidence gap, and it's one of the most significant mistakes that can stealthily undermine your financial growth. The silver lining? It's entirely fixable. You can implement one simple change this week to prevent it from derailing your future. Let us uncover that mistake and the single action you can take to start securing your financial destiny today. You may have encountered this intriguing and often frustrating paradox. Research consistently reveals that when women invest, they tend to achieve slightly better returns than men. Yet, a staggering number of women still keep their money out of the financial markets. A 2024 Fidelity report indicates that while women's participation is on the rise, with about 7 in 10 investing outside of retirement, a significant confidence gap persists. Women are often conditioned to be cautious savers rather than bold investors, and that hesitation can cost millions over a lifetime. Let's delve into the story of someone you might recognize. We'll call her Sarah. Sarah is exceptional with her finances. She maintains a solid budget, has no high-interest debt, and is a champion saver. Each month, she diligently transfers a portion of her paycheck into a high-yield savings account, watching that balance grow. She feels responsible and secure. But here's the hidden truth Sarah overlooks. Her hard-earned money is losing value every single day. It's parked in that savings account, earning a mere 4–5%, while inflation steadily erodes its purchasing power. She wants to invest. She knows it as the key to building real wealth, but the entire concept feels overwhelming. The jargon sounds like a foreign language, and the fear of a market crash convinces her that doing nothing is the safest option. Her savings account feels secure, but safety doesn't equate to growth. Sarah, like countless other women, is mistaking saving for investing. And it's an incredibly costly error. So, what's the real mistake here? It's treating your long-term aspirations with a short-term tool. Saving is meant for the short term. Your emergency fund, a vacation, or a down payment in the next few years. That money needs to be safe and easily accessible. Investing, on the other hand, is for the long haul. It is how you build wealth that outpaces inflation and allows your money to truly work for you through the magic of compounding. Relying solely on savings for your future is akin to trying to win a race while standing still. While past performance is no guarantee of future results, history shows that the stock market has delivered average annual returns of around 10%. A savings account will simply never keep pace. And here's the kicker. That hesitation, that lack of confidence, it's entirely misplaced. Research after research demonstrates that women often outperform men as investors, typically because they trade less, remain steadfast during market dips, and conduct thorough research. Those qualities you believe are holding you back? They're actually your investing superpowers. So how do we turn this around? You don't need to transform into a Wall Street expert overnight. You just need to take one small, powerful step this week. Open an investment account and automate your very first investment. That's all it takes. By making it automatic, you eliminate the emotion and fear from the equation. Here's your 3-step action plan. First, select a beginner-friendly platform. There are numerous excellent robo-advisors or low-cost brokerage firms that simplify the process of getting started. Second, choose a straightforward, diversified investment. You don't need to complicate things by picking individual stocks. A fantastic starting point is a low-cost index fund, like one that tracks the S&P 500. Think of it as purchasing one share that encompasses a tiny piece of 500 of the largest US companies. It's instant diversification in one easy package. Third, and this is the most crucial part, automate it. Set up a recurring transfer, even if it's just $50 or $25 a month. The initial amount is far less important than the habit you cultivate. Consistency is what builds wealth over time. This strategy is known as dollar cost averaging, meaning you're investing regularly, regardless of whether the market is up or down. In truth, the biggest financial risk isn't investing and making a mistake. It's not investing at all. It's allowing fear to keep you on the sidelines while your money loses its power. You are more than capable of creating the wealthy future you deserve. You possess the skills, the right mindset, and now you have a simple, actionable plan to get started. So, I want to hear from you. What is the first small step you will take this week to become an investor? Share your thoughts in the comments below. Let's build this future together.